Good morning. I'm Hamid Ibrahim, and I want to thank you first for giving me the opportunity to participate in this Financial Inclusion Week. And I want to share with you some of my thoughts in this area. Let me just start with some historical perspective on financial inclusion using Somalia as a case study. Now, my first starting point on this discussion is this graph, which, because we're going through this COVID-19 pandemic, warns us or tells us that 7 million more people are pushed into poverty. So if I want to use this as my starting point, the question that comes to my mind, and I hope many of you, is who are those 97 million more people who are pushed into poverty? And what's the role of financial inclusion? Who are these people? Now, as it happens in many cases around the world, when problems like this happen, the hardest hit of these shocks are the low income populations. And both the CFI and World Bank confirm this through their data. We read and we learn that it's always that segment of the society that gets hardest hit. So I guess the first question that comes to our mind is then, how can financial inclusion help? And most of the studies and the papers we're reading from the CFI and other think tanks tell us there are many ways that we can deal with financial inclusion. My specific area of interest is remittance and mobile money, which happens to be the genesis or the beginning, the way I look at it, of the whole idea of all the innovations in financial sector, including even the cryptos and what we're going through now. So let me just talk about how remittance can help financial inclusion, and then I'll move on into mobile money, and I will conclude with my case study, which I briefly will mention about the financial inclusion initiatives in Somalia, and perhaps even include what the global players are doing, the UN and its agencies in this area. So let me just quickly start with remittance. We all know, as more and more people moved on into the developed countries and moved from developing countries, those people, I guess the terminology or the word used is the diaspora community, send a lot of money back home, and they help their families and friends back home. That helps in a way, in an indirect way, the financial inclusion, mainly because people who were not before involved in dealing with finance receive money from overseas. And that process was working for a long time until the last few years, when banks in the developed countries, if I use Australia as an example, there was a new policy called debanking or de-risking policy, where a lot of those remittance companies lost their bank accounts, and that reduced the remittance that was going to those developing countries. Now, what is the impact on financial inclusion in that area? What that really means is a lot of people who used to get money before are now excluded. They're no longer in the banking area, or they don't get money, and so on. But the good news is there's a lot of innovation happening in that area, where if I use Yale or some of the companies that I know of, who develop apps that then enable the remittance to move from the traditional way of going to an office or shop and sending money. Now people use their mobile phones to send money. That then enhances the financial inclusion, because a lot of people are now back again getting money from their friends and family members. Now, that area is assisted, or the other part of the recipients, the people who are receiving that money, they also use mobile money. If I use the classic example of M-Pesa in Kenya and in the Horn of Africa, where there are a lot of other mobile money initiatives, then people who used to get the remittance through what is classically called the Hawala system, if they're getting that money through their mobile phones, then they will use mobile money to also transfer funding and buy and sell stuff and so on. But in terms of financial inclusion, though, the the people who can do that are people who can also afford in the first place to have mobile phones. So if you are really very poor and you can't even afford mobile phone, then you are again excluded because you're not taking advantage of that technology and you're not using that system. Now, the other thing I want to move into is the what the challenges. What are actually the problems that inhibit people to be included financially, even if they're using technologies like mobile money and other innovations. The basic problem is access to money itself. If you don't actually have money in the first place, then there's nothing to talk about in terms of financial inclusion or financial exclusion, because financial inclusion assumes that there is funding available in the first place. And after that, again, how much of that money you can save and what is the transaction cost, and again, having access to a bank. Now, these are things that we assume are obvious, but sometimes we overlook because the discussion seems to start at the financial inclusion and instead of looking at what are the foundations that we need to think about. So even living away from a bank can exclude some people, because if they cannot get to the bank or if there are no banks, then the original assumption will not work. So I will leave those two items for the time being, and I want to just look at this from a global perspective. So keeping in mind, we were looking at remittance and also looking at the mobile money when people back home or in the developing countries receive money. There were some good initiatives that tried to solve this problem, and I will take two of them from a UN agencies who are focused in technology and also the postal system. So let's say the ITU and the UBU, and they did a good job in this area. So there was an initiative called the FIGI, Financial Inclusion Global Initiative, that basically tried to look at this case from a global perspective. And it was a 3-year program tried in 3 different countries. And very interesting. I will encourage people to read this. The reason I'm picking on this issue is that the financial inclusion, unless it's done at a global level and everyone is involved, we'll be missing good opportunity to learn from each other, share that knowledge. And I will particularly highlight this because if you look at what the ITU was trying to do, is try these 3 major issues to be resolved for financial inclusion to happen. And it's worth going back to, although this program has completed successfully, it still has a merit to actually check and see what more can we learn from this and how can we implement some of those policies. Now, the other groups that are involved, and there are many, they're all doing good job. And that's the good news. But it seems there's a lot of coordination required, and that's where things are not really working very well. Now, as I mentioned, the Fiji initiative from the ITU, that was very successful. But the real positive outcome can only be expected if we really move forward and actually implement some of those policies. And even as late as yesterday, the UBU, again, also another UN agency that deals with the postal systems, introduced, there was a report that was talking about digital financial services. Very good attempt. I congratulate and I really like to mention that the UBU did a good job helping financial inclusion. But still there is the need to put all this together as a package and look at it from global perspective, because there are other people who are also doing things, but not necessarily helping the poor people. And in this case, I want to mention some examples, but the idea is though to really look at the positive side and figure out how can we continue the good work that these other groups did. Now, some suggestions, for example, what can we learn from these initiatives? If the focus is really to help the unbanked, and we're saying there are people who are financially excluded and have no access to the banks, then we should look at the deeper problem. We should look at why is that the case and how can we make them banked. But is that all? Is that really all we have to do to achieve financial inclusion? I think not. I think there's a lot more than that, because it's not only the unbanked. There is also the underbanked. So even people who have access to banks, some of them might not be using all the financial services that are available to them. And then there is also another group, the unbankable, those who cannot be banked at all because of the credit history or whatever the reason. So it's a very complex issue, hence the need for the coordination through all the global players for all to win, if you really want to get into the globally successful financial inclusion project. Now, I want to continue and mention even the Center for Financial Inclusion. I was looking at as a part of my research to look into financial inclusion over the last 2 years. It's not, if you look at the website, there are a lot of reports, but they're already 2-3 years old. Now, the other thing that I want to mention, and I want to put this in a positive way, is countries like Somalia, where I said I will use it as a case example. If the initiative comes from the World Food Program, a lot of questions can be asked. Why not the private sector? Why not the average citizens, people who are involved in business? Why should the World Food Program be involved in financial issues where people who are internally displaced people or refugees getting cards to withdraw money and so on? A lot of questions can be asked. So the better option for me, the way I would like this to be implemented, is if governments were involved, if other private companies were involved, the initiatives between the banks and the credit cards, again, in a way, maybe it's a positive step, but a lot of people will question. If I'm in Mogadishu and I see a bank and MasterCard working together, the first question will not be about financial inclusion. The first question will be, what's in it for MasterCard? Who gains, who loses? So while MasterCard and Visa are good at what they're doing, their solutions might not necessarily be applicable or useful to a poor person who cannot really afford paying interest for the use of a card, and no matter how good that card is, whether you call Master or Average or whatever term you use, or whether it's Visa, even the terminology confuses people. So that just needs to be thought through if we really want to think about financial inclusion in a developing country like Somalia. I will continue, and I want to mention a couple of other ideas. What specific suggestions, for example, for Somalia or for a country that really want to engage and implement financial inclusion initiatives? I looked at the literature, and you will see things that are here and there and everywhere, but not coordinated. So maybe this is an area, again, where the UN agencies and the Center for Financial Inclusion, or anyone else interested in financial inclusion for developing countries, and where people really need to be financially included, can help and then enable financial inclusion. I'm just sharing this slide to initiate discussion, to actually basically remind ourselves what are the foundational, what are the real problems, what are the serious issues that inhibit financial inclusion. So I will leave that thought with you for all those who are involved in this area in terms of helping developing countries to get into financial inclusion. Now, although my talk for a while was now on developing countries, when we talk about financial inclusion, it's not really only developing countries, but even developed countries. Financial inclusion is something that we all need. Now, lessons we learned from the, the COVID-19, when all governments were trying to help their citizens, and there were rescue packages, and in Australia we had the job seeker and the job keeper and all these initiatives. In some countries, for example in the US, there were a lot of people who couldn't get even those checks or couldn't cash. In any case, why even checks? If you think about it, if you live in the US where technology is so advanced, how can it be that millions of people couldn't even cash or couldn't get that money? I read amazing stories where people were getting checks by email and then printing this in the public libraries and then paying some service money to cash that check. Amazing stories. But what it really highlights is financial inclusion is not only limited to, or the problem is not only in developing countries, but it's everywhere. It's a universal problem. And if we really want to get everyone financially included, we should think about innovations, like I mentioned, what the UBU and the ITU and other people are doing, and focus less on what credit card issuers and other people who have profit interests in their mind first, rather than helping the poor people and the unbanked and so on. So I'm making that clear. That's really my position. That's what I believe. I think for everyone to be financially included, we need to think in a global way everywhere, rather than specific businesses who also want to make money or want to create profit for their shareholders, and not necessarily for the people who need the financial access. I will conclude with those thoughts, and even this week there were a lot of good initiatives coming up. I was happy to read the AUSTRAC in Australia talking about the de-banking and why the remittance companies couldn't get their bank accounts. On the weekend, there was the Somali diaspora having a meeting, and I was happy to see our central banker talking about a lot of issues. I haven't heard a lot about financial inclusion, but those are the areas we really need to focus on and pull all our resources together if we want to move forward and get everyone financially included. Financial inclusion is not really only about having access to a bank account. It's a bit more than that. And I'll leave for others to continue that discussion and tell us more about this. That's all I really want to say today. Thank you very much. Those are links more about me. So financial inclusion for all. Thank you.